I'm 53. I'll be 54 in October.
I'll be 55 this year.
Bro, I keep on waiting for, like living down here, everybody kind of looks young, right? But I think there's two things to it. I think where we live dictates a lot of it. I also think that we have always, I've known you, 25 years or something?
We started at IndyMac in 1990. No, 2000.
I started there 2003. I was 2003 at IndyMac. I think you were before me.
Yeah, I was 2001-ish.
Yeah, so I know you 22 years. But we've never worked the type of jobs or done the type of things where, man, I gotta be up at 7 in the morning. I gotta be at the office by 8. We never worked like your traditional office jobs and
high stress, challenges, overcome them, self-driven, got to make your own money. This is the green room. This is where all the good stuff is. This is what people never
100%. Yes. By the way, even if your screen looks a little pixelated, this is what I love about a little commercial for StreamYard. But this is what I really like about StreamYard, because it will literally, even if you get like a little pixelated, it's recording in the cloud. And then when we get done and I click end recording, don't leave, and it downloads your entire recording. It's absolutely wild. I love it.
StreamYard's wicked cool.
Yeah. Have you used it before?
I've been on about 38 of these StreamYard podcasts.
Okay. So. Yeah. And I like it too because it records your video separate, my video separate, and our audio gets recorded separately. So when I download it, then you can really edit it into a really well produced thingamahoots.
Got to just get this off here real quick. I don't want people looking at.
Yeah. You don't want anybody pulling up any data from and knowing the secrets of Improvifi.
Man,
so, bro, I know we're in the green room, but we might as well just call this entire podcast the green room, because that's really what it is. I wanted to start, I sent you an email, just like some good that you're grooming and keeping yourself, looking good. But I think that there's a lot of things we could talk about, but I want to focus on what you have going on right now. But I want to backtrack to what we started talking about when we jumped in the green room. Yeah. About our journey from working at basically the first lender that was really all about technology, yes, to where we are right now. Because even though you and I are a little bit older in this business, yeah, we kind of really embrace technology and video and everything like we're in our 20s still.
Yeah, like I don't use paper anymore. I use a Remarkable.
Yes. I'm still with just pieces of paper. I have like pieces of paper all over my house, but then I always take a picture of it and it gets digitized and gets memorialized. And gets filed away properly. So I started working at IndyMac in 2023, and just let me backtrack and go over 2003. Let me backtrack so everybody understands what IndyMac was. IndyMac was a bank based out of Pasadena, California. Yeah. And they were the largest Alt-A lender at one time. They really did I can remember walking into some of my mortgage accounts, and saying, anybody you have that's less than 70 LTV and has over a 700 FICO score, our rates are going to be below 7%. It was like 777s, 700 FICO score, 70 LTV, rate under 7%. Why even give me any income documentation? And then they did a lot of 12 mat or the pick-a-pay loans, but you specialized a lot in doing like the construction loans, right?
Yeah, construction to perm. So that's the interesting part. But I'm going to push it back. Are we live right now?
Yeah. Well, we're not live. I'm recording it, and then I'll edit it and then chop it up.
Gotcha. It goes back farther than 2001. I started in 1993.
No way.
With construction to permanent loans with Republic National Bank of New York.
Do you know they're still around?
Safra, HSBC.
Yeah.
That's where I got into lending in 1993. Tim Lernahan hired me in Boca Raton, Florida.
Yeah. So how did you? But you've always specialized in something construction or remodelation related. How did you get involved in? Like, why was that your niche?
So I started in roofing in 91. I was building roofs in St. Lucie, West Florida, where all the really cool spring training fields are.
Yeah.
And then I got my mortgage, my realtor license. And of
Okay.
course, when you go get your real estate license and he's a young guy in your 20s and you didn't have any mentors or guidance back then, shit, we didn't have
Right.
cell
Yeah.
phones back then. We had
Mhm.
pagers, right? I love you, 143. Um, I was like, I don't really like real estate, but then I started learning about the mortgage thing, and I'm like, ooh, I kind of like the money side of this business. Coming out of
Mhm.
roofing, getting my mortgage license or my realtor license, and then I went right into associate director level with SAFRA, Republic National Bank in New York, where you are in Aventura, was my office. I would drive from
Wow.
Boca Raton to Aventura, North Miami Beach, with a blow up doll in my car in a Saab 900 turbo, tinted windows, so I could get there faster to work. I started in at the highest level that you could in banking with a 4-week vacation, like a full bank job, like high level associate
Wow.
director, 4 weeks off, right into the mortgage industry, dealing with construction to permanent loans and wholesale loans with a lot of people that you might have even, I know you were up in Long Island, Garden City area. So anyway, needless to
But they
say,
don't even have like they don't have those types of bank jobs anymore.
no. So I went in
No.
there as a wholesale mortgage director doing construction to permanent loans, and we were stacking 1003s and paperwork. This how thick a file was to get it underwritten approved. I was driving and picking docs up and stacking and driving and doing stuff that you're not allowed to do because it's illegal to do that stuff, bringing the
Right. Yeah.
paperwork home and then taking it to the office. Like, that's a federal charge. You can't do that.
Yo, that
Anyway,
like
that's
things
when
were
I
so different back then. Yeah.
so that's how I got hired at IndyMac Bank, was because they saw my resume of real estate, construction, um,
Yes.
doing that history got me the job at IndyMac Bank, where then I was the kind of director of the construction of permanent with Nathan Walsh.
So here's my first impression of you. I get
Wow.
hired at IndyMac, and within a couple of months, I think within like your name was always like circulating in the emails, and I was on Long Island and Queens and Brooklyn. I think at the time you were living up in Rhode Island, I believe,
Is that when we met?
or
No,
upstate New York.
I was in Pasadena. I was at headquarters.
Okay, okay. And
Yeah.
I can remember going to an event in out in Disney, and
Yes,
you
the
know,
dinosaur
and I'm
land.
upstairs in my room. It's like it's after the dinner or whatever, and like we had hung out. Hey, what's up? What's going on? Blah blah blah. And then I'm up in my room, and I hear like this
So
Bon Jovi being played on the guitar, and I see everybody downstairs, and I'm like, who is that? I'm like, that's Scoville. And I go down, we hang out, and but what a time with IndyMac. And it's funny how IndyMac wasn't one of the chosen few banks that survived, but yet their technology and what they were trying to do was so
Emit.
far
Was it
ahead of
Emit?
the curve.
Was it Emits?
It was Emits and it was Siebel. Siebel was their CRM. Do you remember that?
Do I ever? Yeah. No, I don't. I think I have the. Hold on, one moment. I'm coming. Please. That broke the fourth
Yeah.
wall. I just broke the fourth wall. You ready?
Tell me you have. Yeah. That
Dude,
is
we got to
fantastic.
send this to Nathan and Jeff Cavros
Yeah.
and all
Wow.
Walter Tharp. We got to send this podcast to
I
him.
remember
Oh,
them. Yeah.
Ed Aloy. Ed.
I remember Mike Wagner. I remember
Oh,
what's
dude.
his name out in
Ed's up
Dave
the street.
Margulies. I worked for Vinny. I was on Vinny's team.
Yeah,
Um,
Ed's up the road from me. He's a private capital finance commercial guy.
yeah, of course he is.
I'm in Utah now, of course. He's up the street
Yeah.
from me in Park City.
No
We're all
kidding.
still in touch. We're all still doing business together. Do you remember Jeff Cavros?
Yes. Yeah.
Jeff and I work. I've got a lot of different divisions at my company, Improvifi. Jeff and I
Okay.
are doing HELOCs together.
Understood.
Yeah.
But I want to talk a little bit more about the technology because I've
Yes.
seen what you're doing right now, and I want to get to what you're
Mm.
doing. But one of the reasons that I left where I was and went to go work at IndyMac was
Yeah.
I saw emits and I saw how these mortgage brokers could literally export their file out of Calyx or Encompass, Calyx back then,
Yeah.
and then upload it into Emits. So there was no paperwork flying around. There was no, let's send this out via FedEx. It was, let's upload the file, and then literally the file will get done electronically. And then I don't know if you remember this, but when they would clear their STIPs, of course, nowadays everything's done basically electronically, but like they would have a piece of paper, like they would print up their thing, and then they'd say like, okay, STIP 11A with a barcode, and they'd fax it in, and it would just mysteriously end up in the file.
They were way ahead of everything.
Yes. But they were way ahead of everything. But because they were kind of the guinea pigs, if the system wasn't working right, it was a nightmare. But on the loans where it worked right, that's why I said I would go in with the 777. I would say, 700 FICO, 70 LTV, 7 or better. I'm doing. And literally those loans, because there wasn't a lot of documentation, and even back then, most of the title companies, they were already PDFing their title reports and everything. But it was just that ease of, let's do everything as electronic as possible.
Yeah.
And then the other thing I was big with, which
I'll blow your mind when you find out what we're doing in home improvement technology-wise. You're going to be like,
I want to get to this because this is where I'll tell you a little bit about what I have going on right now outside of the TV show and everything. But and the other thing was that they were also big on the CRM, which was Siebel, and like protecting accounts. So if I went to an event and I got this stack of business cards, can you believe I have a stack of business cards?
I just laughing.
and like I would enter it in like now like I only have this stack like this is from like the whole year. This would be like a day and a half back in the day, right? So and then you would put an account in that. Now that account was protected by you. Nobody else could go talk to that account. You needed an act of God. You needed Mike Wagner himself. Tom Wagner, Mike Perry to come down and be like, okay, this account can get transferred to this person. But that to me was huge. And then being able to blast email and everything, that was huge. And that brings me to what I want you to discuss is how you've built your business and how you've used technology to build up a database of 75,000 contacts and what you got going on. So tell me.
Yeah. Awesome. There it is. 13-minute intro of Austin. And our energy is ridiculous. I was speaking at an event at Arrowhead yesterday or the day before. I don't even know. It's a blur. I was up at Arrowhead speaking there, and the guy, I'm up on stage, and he looks at me, he's like, how old are you? I was like, really? That's your question from the audience? Can't we talk about what my presentation anyway? How old are you? I was like,
if you were wearing a dress and had a different gender, would he be asking you how old you are?
I don't know. He'd be like, who are you or what are you?
Yeah.
I said, I'm 54. He's like, how do you have this energy? I'm like, all right, well, let's just meet afterward and talk about that stuff. But anyway, it's just funny the amount of energy that you and I still have. And I don't think it's out of anything other than we have a massive passion for what we do and what we deliver to people. And that's why we shine the way we shine. So anyway, with that being said, I built this company. It's called Improvifi, Home Improvement Lending, Improvifi, Financing Improved. If you're wondering, well, what the heck? It's not the improv, it's Financing Improved. So I built this company out of necessity. After spending all these years working for banks, working for finance companies, I was collecting data. And the data that I was collecting is, when I build my own financing company one day, what will be my blue ocean strategy to go out there and steal the market and completely take their business? So I'm collecting these data points of, well, I wouldn't do it that way if it was my company. Oh my goodness, I certainly wouldn't do that. I wouldn't do that. I wouldn't offer that. So I'm collecting all these things because I knew someday I would build a finance company. So I built the finance company out of necessity to do what others are not doing and to simply be different. Many finance companies treat lending as a commodity. Here's your loans, go sell. You know this from the mortgage world, right? Here's your rate sheet, go sell. And I was like, no, we're not going to do that. We're going to partner. We're going to offer unbelievable integrated technology-driven financing solutions. We're going to offer training, and we're going to offer support. Those are our 3 pillars. So to get to your point about the technology that we are integrating into contractors, let me first explain kind of like what the lending is. So you've got an air conditioning system at your house down in Miami that broke. and it's going to be $15,000 to replace this thing. And you're a homeowner going, honey, we don't even have $5,000. And you're like, ABC air
Honey,
conditioning.
go open an OnlyFans right now.
What the fuck are we going to do? If we don't have an air conditioner in Florida, we die. So it's a grudge.
Not only do you die, but the actual, all of the structure in your house starts to disintegrate from the heat.
Yeah,
Cement,
you die.
Cement, insulation. If it gets hot, it starts to swell and breathe and get wet. It ruins everything.
It's a necessity. Nobody wants to wake up and buy an air conditioner. They want to buy a new Rolex. They want to buy a new car. Nobody wants to buy a roof. So we're talking about necessity home improvement. So you open up the Googleator and you Google air conditioning Miami. And some guy comes over to your house. And you're like, hey, my air conditioner's broken. He goes, hey, it's going to be 15 grand. Pay me. And you as the homeowner are like, I don't have any money. So here's where we step in. Improvifi Financing steps in and offers financing through the contractor to the consumer through a mobile app at the point of sale where they apply in a soft credit check, and 3 minutes later, they're approved to $150,000 of unsecured funds.
I say this all the time. How can you go get a credit card for 20 grand approved in 60 seconds or less, but then you're buying a house, putting down 25%, and they make you go through this ridiculous process? How come they haven't figured out the mortgage process to make it that streamlined? But you can do lending like this the right way, where you can offer an approval, like a valid approval, not approval subject to.
No, funds are in the account ready to be paid to the contractor in 24 hours via ACH. So I get $150,000 approved because I got an 850 FICO. I make decent money. My wife pays me once in a while. So I said to the guy, all right, I'll take it. It's only $89 a month. Right. So air conditioning guy calls his guy. They come out, they deliver. They install the AC. I'm the contractor. I go to my portal and I go, pay me. And it gets to my email. I'm Chris Scoville, the client. And I go, you're paid. And now the money goes in via ACH to the contractor in 24 hours. That is the technology that we created. But hold on. Wait, there's more.
But wait, there's more.
There's more. It was good timing. That was great timing. So,
but wait, there's more.
But wait a minute, Chris, I or John or Bob, I don't have great credit, man. Like, what can we do? My system won't just offer you a retail installment contract alone for the home improvement. It'll give you a revolver and it'll give you a rental program for your HVAC. So if I have horrible credit and I have a 305 credit score in Miami, I can click a button, buy my air conditioner, have the air conditioner, and I can rent that through the contractor to our finance portal.
So in other words, they don't have the 15,000, but they have 2,000. They put down a deposit and then they pay it off as like a rental contract.
Whatever they want. We can do rental, revolver, installment, but wait, there's more. I, Chris Scoville, don't like unsecured loans, revolvers, or installment or leases. What I like is I have equity in my house. I want to pull $15,000 out because I'm thinking about putting a hot tub out back too, which is another $20,000 with a deck. So I don't
want to do an FHA 203K loan.
And I don't want to do that because it takes time. So they go to my other button inside my app and they press secured loan. I do a secured loan, 5 to 7 days funding with no appraisal, and the money's in the consumer's account and he pays the contractor with no appraisal. So
that's kind of like what's the program they have down here in Florida? Everybody does it for like their solar or whatever.
That's a tax lien. You do want to stay away from a PACE. Property assessed clean energy is bad. That's a lien on the house. It's in first position, and those are very ugly loans. Mine is a first, second, third position, 85% CLTV, no appraisal, money to the consumer, 5 to 7 days funding.
Dude, are you serious?
Up to $400,000 at a 640 FICO. Yeah, this is the company that
now what is it on the back end? What is it that your system is reading? That what are they looking for? Are they looking for outside of FICO score? Are they looking for like paying their mortgage on time? Like if they paid their mortgage on time for the past 24 months, they're probably going to continue to pay a $100 bill on time.
Unsecured underwriting is completely different than mortgage. So ours is very lenient. I need to have a 550 and up FICO for people that want a real loan. They have to, be paying their bills. They can't be seriously delinquent. So we have different buckets. We have prime, near prime, prime, subprime, and super subprime. Those buckets are determined through risk-based pricing model and underwriting bucket, which will determine what the pricing and their term is and how much they're offering. So somebody that is super prime, they'll qualify for the best rate, 8.49% for a 20-year with no prepayment penalty.
Yeah.
Good loan, $88 per 10,000 payment factor. And somebody with challenge credit, 600 FICO, they're going to be at a 1.77 payment factor, which is $177 per 10,000 up to a 10-year.
Okay.
So the system will automatically put them in a proper bucket where they need to be upon their credit score and their credit history. But it does it
people that have like the 600 FICO, right? I mean, let's be honest. The people that have a 600 FICO that they need to have air conditioning, they need the 15 to 20 grand for the air conditioning. They're like, all right, they're going to pay. The people with a 600 FICO aren't going to take out a $150,000 loan to put a lagoon style pool in their backyard.
They don't care about the 16.99% interest rate. The only people that care about 16.99 home improvement retail installment contract unsecured loan is your guy that's sitting with a 790 and he's like, oh, I'm not doing that. Cool. No problem. I handle objections and obstacles perfectly fine. Let's do a secured loan for 6.90 up to 30 with a 5-year repay on it. So we can adjust.
Done.
We train our contractors how to handle obstacles and objections just like that at the point of sale. And all they do is go to my mobile app and click the other button and then hand the phone to the customer and they apply. So we brought technology.
Because exactly what you're talking about is something that I'm involved with right now on the lending end of things. Of course, I'm still in media and everything, but the other thing I wanted to talk to you about has to do with Improvifi. I've seen you. I think that you kind of developed this when you moved down to Florida, no?
I built a software company called Blue Pages Pro and exited a few years, and now it's called Proper. Want to hear a good URL?
Yeah.
Are you ready?
Yes.
Property.com.
That's a great URL.
Sorry, it cost $1 million.
That's worth a couple of million just without anything behind it.
The URL cost $1 million.
Yeah, absolutely.
So anyway, property.
But I've seen you build this business.
Yeah, I exited.
I built the business, and I've seen you take everything that you've done, and this is really what I wanted to talk to you about.
Yeah.
How are you? Did you create funnels? Did you create landing pages? How did you build it? Because I know you have a huge database, 70,000 plus names in your database of different contracts. How did you build the database? And like, what's the basic outlet? Don't give away your company secrets, your proprietary business, but how did you build it? And what's the basic model of it?
Yeah, it's real easy. There's nothing to not share. It's everything to share. Organic growth and persistence. That's it. You guys, listen, whoever's watching this, if you believe in what you do and you have a passion for what you do, just be seriously persistent and don't give up. Obviously, keep your day job until you can give it up. But this is going to blow your mind. We've built a multi-million dollar, I have $1 billion in commercial right now. Just in commercial, I launched that 45 days ago. So we've built a massive company organically without $1 in ad spend. If you ask me, Ronnie, what ads do you guys run? Where does your ad spend? How much you spend on ads? I'm going to go, dude, I don't know what you're talking about. I don't even know how to run an ad. I've never ran an ad. And I would have to hire Cody, he's in our marketing team, to go run some Facebook ads. So to answer your question, the only thing that I've ever done is stuck with what I've done. I've been in financing for 31 plus years now. I've deviated here and there. I made a software program, but I included financing. So I never stepped far away from the financing line as I've been building this thing. And I've just delivered results to people. And a lot of it was free. It was education and training and support until my wife walked into my office in January 2024 and said, stop giving away everything for free. You're worth more. Charge for what you're doing. And I went, and Tiffany, you're nuts. Nobody will pay me money to do this. I have to give this away free. I have to. No. I learned very quickly in 1 week when I built a program called The Program that people would pay me $5,000 a day just to go to their office and train them on what I know. So that is when I had the big changing and turning point and pivot point in my life was I'm worth being paid for what I do because I'm an expert at what I do.
Mm-hmm.
That was the pivot point of my life. And when she told me to do that, and I pushed back and said, no, no, no. And she said, yes, 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 because you're working for free, is what was a turning point of our profitability. And we built a multi-million-dollar company from that in a year with no investors, with no capital, bootstrapped from nothing. I took a home equity line out of my house in Florida.
Yeah.
And I was like, okay, maybe for a couple months, because our bills were $20,000 a month still, because I was paying $350,000 a year as a bank executive with my feet on the desk that I walked away from to do this.
Right.
Go to zero, nothing. And so I took the home equity line out thinking like, okay, maybe I'll have to dip in a couple months, 40 grand in debt. I'll be okay and get out of 40 grand. We only had to dip in there for $5,000 1 month to pay our bills.
Wow.
It's been a blessing from the Lord. And I pray every day, like, Lord, I promise I'll keep serving. Lord, I will keep serving and taking care of these people and helping these people if you keep doing what you're doing for us.
Jesus.
Like that's it. It was consistency, persistence. It was organic. It was training and passion and staying focused and just really helping people and delivering results, right? That's it, man.
And so now you built up your network. You said something that was interesting before. You partner with all of these contractors. And I know you have thousands of contractors in your database.
Yeah.
How many contractors is Improvifi actually doing business with, funding deals with on a monthly basis? And how many deals are you actually doing on a monthly basis?
Yeah, 5,500 in our portal, members that are logged into our mobile app. We have over 675 clients. So we have a lot of users using our lending. We have a lot of clients that pay us annually to be on our platform. And we did that in 1 year.
Jeez.
And
it's amazing.
It's $2,500 to $3,000 a year to be a client. And some of our clients,
what do you mean?
They pay to be on my platform to use my lending.
Oh, no. So the contractor has to pay a fee to use the lending?
Yeah, because we provide multi-lending, training, support, a university I built inside a school, weekly training classes, quarterly KPIs, audits, and results. We have our tech stack and our value stack when they come on as a client is like this. And they're like,
so how much are they paying a year? Explain that to me again.
$2,500 to $3,000 for the platform.
Okay.
Some clients will pay me $5,000 a day to come out to spend a day, 8 hours with their team and train them face to face. And then we, of course, have banking relationships where, we make, a little bit of money on the loans, not a lot. It's a very thin margin game. So in mortgage, you can make points, right?
Sure,
on a loan.
right.
In my world, it's 10 to 15 basis points.
Yeah,
like,
it's because
dude, it's $10 to $15 per 10,000 funded. So trust me, nobody's making money in the home improvement world being you can't be a broker in this world anyway. You're not allowed to do it.
So the majority of your revenue is coming from the accounts that you're setting up and teaching them how to do it.
Yes and no. That obviously is my operating capital for me to have 15 plus full-time employees. The majority of my revenue is, as a CEO, I manage risk. That's all I really do is manage risk. So how do I do that? I have unsecured, secured, revolving, installment, commercial, investment, fix and flip, mortgage.
And you just make sure each bucket doesn't overfill.
Yeah,
and one
so
bucket
it's a beautiful bucket of services and solutions that we provide. That if one bucket ever started to tip a little, we go all in on the other bucket. So, yeah, it's been something else. I mean,
is it like even Steven on the income between the lending and then the users paying the monthly fee?
No, it's the subscription platform is probably, yeah, you're right. It's probably even Steven if I take commercial fundings into respect here. Yeah.
Are you white labeling what you do, or is it just all Improvifi?
We are the lender now. So it's not private labeled or white labeled. We are a lender. So, and that was just released 2 weeks ago. U.S. Bank Corp Citigroup fund through Improvifi through an LOS to the contractor.
Oh,
So
that's
we're
great.
officially a
Yeah.
lender now. I was never able to say that before.
Couldn't you increase revenue though if you just played with the margins a little bit on the
Yeah,
lending?
yeah, I could, but here's the reason why I don't. I want to be a disruptor, and the only way to disrupt is to do something different. So Steve Jobs said, "What? Think different."
Right.
We lend different, and the only way for me to take down the big banks is to go in there and cut them off at their ankles. And how do you do that? You go in with a better pricing, better program, better product, better service. You beat them on rates. You beat them on dealer fees. If I beat my competitors, Wells Fargo, Synchrony, Service Finance, Green Sky, because I keep my margins thinner, I don't have to make 500 to 600 basis points on loans. I can make 10
listening to you.
I can make 10 to 15 basis points on my loans and take the market. So it's a very strategic chess move from me to go, I don't want to be greedy. I want to take the entire market.
Right. It's almost like when to use your analogy with Steve Jobs, right? When iPhones first came out, yeah, they were a little bit more expensive than like the flip phones or like the Blackberries. By the way, I love my Blackberry. I wish we still had the Blackberries. But, now look at it. How we're paying $1,500 for a phone now,
No, we're financing it for $112 a month.
Exactly. Yes. Very, very good point. Yeah. Man, I could sit here and talk with you all day. I don't want to take up too much of your time because you're super busy and you got a lot going on. But I do want to have a follow-up conversation with you offline. I'll put it in your Calendly.
You believe I've got an executive assistant? I don't even answer. I don't answer these, my DMs, my emails, nothing. She does all of it.
Bro, when you get to that point, that's what you have to do. And that's like, so the guys that I work with now, so we kind of do something similar to what you do, but in the mortgage end, right?
Okay.
So it's a federal savings bank. It's called the Federal Savings Bank based out of Chicago. I do all their media for them. But their game plan is they are federally licensing, not state license, federal licensing, fully qualified realtors. So realtors that do a certain amount of business, they'll license them as mortgage professionals. Completely legal to do. And same thing. It's just a blend app on their phone.
Yep.
They get paid, 50 bips on a deal.
Whoa. Hold on. Did you just say a realtor can share in fees on a mortgage?
Yes. Perfectly legal. It just has to be dual compensation agreement has to be signed, and everything's all electronic in that, and it's nationwide.
This bypasses RESPA rules?
It's all approved by RESPA. How about that?
Is this new?
It's the FHFA came out with a ruling like a year ago. We were always trying to do it, but we always ran into this issue. We ran into two issues. First of all, was the legality of it, and second was it was legal with some products, but not with all products. It wasn't legal with FHA at the time. And then the second thing was, like let's say in Florida, not so much an issue, but you take an area like Arizona, where a lot of realtors in Arizona, especially like on the border, they're doing deals in California, Arizona, Nevada, New York, same thing. They're doing New York, New Jersey, Connecticut deals all day long. So you have to get multiple licensing. So now that the FHFA changed their ruling on it, changed their position on it, as long as everything is signed and disclosed from the beginning, not like, at closing, sign this form. Like at the beginning, when they sign the buyer broker agreement, everything's signed right then and there. And they're licensed federally, right? So that takes care of everything. So now they don't have to go get state licensing and take 50 different tests and 50 different courses. They do the course internal with us, just like a regular bank would. And then it's just a blend app. They have to do the blend app and they have to be involved in ordering the appraisal. They have to manually, answer an email or click a button, order the appraisal, order the title search. That's it. Legally, that's all they have to do.
That's fantastic.
And they get paid 50 bucks.
I'm glad. I mean, look, I'm a huge proponent of the Frank Dodd Act and all that stuff because we needed some stuff, but it's gotten to the point where, come on, man, it's 2025. These consumers that we're meeting are so intelligent nowadays before we even show up. We've got to grow up. We got to get out of this old fashioned.
And like I said, Chris, people, you can go get a $20,000 credit card from MasterCard, from Chase or Bank of America, Wells, whatever. You can get a 20 in 30 seconds with
Yeah,
completely not tied to anything.
it's a
So
mess.
the way that you seem to be doing it, where you can get your decision in a couple of minutes, and you have
Yep.
all these different buckets, you know,
Yeah.
and the buckets are assigned based on, risk assessment and loan level pricing adjustments or whatever.
Yep.
That's the way that lending should be.
It will.
We live in
It
an
has to. It has
information
to.
superhighway.
It has to grow up, or else it'll be left
Mhm.
behind. Somebody will be
Correct.
the disruptor that builds it and then gets it approved.
You
So
know what's going to happen with mortgage lending? I think within 5 to 10 years, probably within 5 years. You know what's going to happen?
self-fund
Well,
consumer.
right. There's not going to be any loan officers. They're going to have it right. They're going to have it where everything's just digitized. The credit reports are getting better and better. Where it's gonna pull your income data right off of your tax, right off, not even your
Yeah, you
tax
go to
returns, your income data right
it'll
out of your
pull.
bank statements. Your bank statements are linked to your credit report. You press a
You're going to
button,
do an
boom, here's
e.
your
You'll
mortgage.
do an e-sign with a notary live. There's your
Exactly.
eyes. It's going to scan your
Hmm.
eyes to make sure you're you. It'll
Yep.
connect to Plaid to see your
Hmm.
last two pay stubs. Yep.
Yep. You will not need a traditional loan officer.
You're not going. Hey,
Um,
you are not going to see me get in that world. I'll be retired by then, fishing down in the Provo River here in Utah.
yeah, I
I am
love it,
not
man.
going into that world. Thank you. You can have that one, Ronnie.
But listen, let's wrap this up. But
Yeah.
before we wrap it up, I definitely, first of all, I want to appreciate you for your time. I know your time is valuable. There's no better commodity in our lives than our time and our knowledge, which you shared very graciously here, 35 to almost 40 minutes. But I do want to follow. I'll shoot you a text. We'll follow up. You'll have your assistant schedule something on your Calendly. I want to have a conversation
Hey,
offline.
let's do a podcast. I'm like, boop. You don't have to
Sure.
ask
Here's
me
my
twice.
Calendly. Set it up.
You don't have to ask me twice. Boop. What are we going to talk about? I don't care. Just bring me on the podcast. People are, I do
And
I do
listen,
them all the time. They're like,
my
here's what
TV show. But this is what we're going to talk about at a future date. So my TV show, I got 3.5 million downloads on my TV show about real estate on Apple TV and on Tubi. I just filmed another season. I'm going to be doing another season. So we'll talk about that and
I
some other
want you
things
grow. Hey, I want you grow that from nothing,
from
dude.
Facebook Live.
From nothing,
Facebook
nothing.
Live with my
Oh my!
phone. Facebook Live, crazy. How do
You're
people get
showing
in
up
touch with
like
Improvifi?
talking, having odd conversations at the pool. People, they're like, "What's wrong with this guy?" Don't worry. I just saw my video from 8 years ago that you did for me. I was like,
That was
"That is
fantastic.
that is gold." Still to the everything that I said in that video is evergreen.
Yes. And you know what's funny though? When I did it, I really wasn't happy with it because I think we should have spent like a couple of days together doing it. But like the way we chopped it up, bounced it back and forth, it definitely captured
Dude,
like
it
who
was
you are.
way ahead of the curve for it was very it
Yeah,
was essentially it was CapCut before CapCut
yeah,
came into business.
yeah,
It was Instagram and TikTok type style
yes,
pop
uh
pop
huh.
pop
It was like
filmography before it even existed. We
yeah,
were going from
even when I
screen,
started doing my own show, when I
yeah.
first started doing my own show, I kind of followed a lot of like the $1 million listing style, where it's back and forth, cutting back and forth to dialogue, and the way that I shot you, and that's how I do the real estate show as well now, was just like that, But it's so easy to capture. I always say this when you're doing video, if you're a video producer, and I don't do a lot of video production work, I'm more into distribution now and everything, but it really helps when you know the person because you understand what they're saying, you understand what they're
Yeah.
talking about, you understand their personality. It's really hard to go out and shoot people that are boring and that have nothing
Dude, the
informative to say.
opening was so bad. How low can you go? I saw that and but it was, listen, everybody watching this, it was so bad, then it's good. You're looking at this going, oh, you're
It
like,
was like the
gonna,
Crazy Eddie. Remember
you're
Crazy
like,
Eddie commercials back in the day?
this is going to be a horrible video. I have to stay on for the whole minute to watch how it's going to end.
You got to send me the link to your YouTube so I can see that video.
I
I
don't know where
tried
it is.
finding it. I couldn't find it.
I don't know where it is either. I'll have to find it, man.
Yeah, find it. How do people get in touch with Improvifi? How can contractors connect with you?
Yeah, simple. Improvifi.com.
That's it.
Go there, and our entire team will help you help answer your questions. That's all we do is help. We consult first. We never bring anybody on without having a conversation. We need to understand your business. We need to understand your customers. We understand how we can help and support you. That's it. We don't have a commodity. You can't just push the button.
I literally have like 30 contractors, from people that do knockdown remodels to
Yeah.
most of my buddies in New York are all like, mason and pool guys. I got like 30 contacts that I want to kind of, I'm going back to New York next week. I'm going to sit down, take them all to lunch and talk with them. So, but
Right, man.
all right, let's wrap this up. How can people find your website? What is it? Improvifi.com?
Improvifi.com. Improvifi.com.
I love it. I absolutely love it. All right. Thanks so much, Chris. Stay on. Don't go anywhere because I got to end the recording and then I gotta wrap this up. But thanks again. Make sure you follow Boost TV on Instagram. Make sure you follow Ronnie GTV, and make sure you follow my buddy Chris.
Thanks, all. See you later.
We'll do part 2 in like a month or two. All right, hold on.
Let's go.